Welcome to the Artisan Podcast, where we share insights from the investment world's leading minds. Today, you're in for a real treat. We have Yan Wang, Alpine Macro's China and EM strategist. Before we begin, now that we're in the age of AI, I need to ask one question of all our guests. Are you a robot?
No, I'm not a robot.
Are you sure?
Yes, I'm very sure.
Are you lying?
No, you will figure that out.
Actually, I've known Yan for many years, and I don't believe that any robot could even come close to him in terms of his thoughtfulness and insightfulness on EM or China. For now. So Yan, the last time we talked, you were in quarantine in China. At that time, there were widespread lockdowns and the economy was barely growing. What a difference a year or so makes.
Thanks, Joe. Thanks for having me again. It's good to be in the office and talk to you. So obviously a lot of things have changed, especially since late last year. So the way that we see it is, I think if you think about it, last year Chinese economy really suffered massively. So the biggest reason was this kind of zero COVID policy, right? So basically, if you have this kind of massive burden on the economy, and then as soon as you remove this burden, the economy just bounce back. I think this is precisely what's happening. How sustainable this is, I think the recovery will have lags for a couple of reasons. Reason number one is, we said, the self-imposed restrictions are removed, and then there was a lot of pent-up demand accumulated in the past 3 years, right? So, the COVID pandemic lasted in China for 3 years. So you have massive pent-up demand. The household sector, the corporate sector, they all hoarded massive cash positions. So now they are in the position to deploy that kind of cash. I think that's the first one, likely, that's the most important reason why we are seeing this kind of rebound. Another reason, obviously, is in terms of policy. Right. So in the past couple of years, the Chinese policy largely was very restrictive. I think this year, after the Party Congress last year and also the People's Congress this year, I think protecting growth is the most important priority for the government, for Beijing this year. So I think this kind of policy change will also help the economy to grow, to recover.
So, I mean, if we look at these two drivers and China more broadly, it's in a bit of a different place than it has been in past rebounds. So, are there going to be different winners than in the past? Most importantly for our listeners who are Canadians with commodity exposure, is it going to be like in the past where, commodities are big winners and the Canadian currency goes through the roof? Or is the growth going to be really towards other things this time and there's a different set of winners and losers?
Yeah, that's a great question. So I think, once Chinese cycle turns up, historically, the winners and losers, I think they are very similar. I don't think this time around things will be completely different per se. But obviously, we know what will rebound more than other sectors, right? So if you look at Chinese economy in the past, let's say past year, it's actually past 3 years. The production side, the export side have been a lot more resilient than consumption, just by the nature of the slowdown, because basically consumers were locked in their homes, so they have not been able to spend their money. So that's why you have a much deeper slowdown in the consumer side than the production side. Exports actually have, throughout the pandemic, Chinese exports did exceptionally well. So in that vein, you would expect, whatever slowed the most during the slowdown period would bounce back the most. That's why, the service sector will probably benefit more. The consumer side the consumption story will probably bounce back more. The production side will recover, but will not be as dramatic as, let's say, the restaurants or the travel related expenditure. So, but nonetheless, if Chinese cycle turns up, production will rebound, capital spending will rebound. So the capital, Chinese economy is still very, very capital intensive. So I do think commodities will also benefit, but you have some other sectors that will probably benefit more.
Yeah, no, definitely, definitely makes a lot of sense. And your thoughts in terms of a more positive or negative view right now on things like oil and the metals and the Canadian dollar.
Yeah. So that relates to the broader view on commodities, right? So
Okay.
basically, that's the kind of they all it's in the same cycle. So we like commodities because our view on commodities basically it's supported by these three pillars. One is on the demand side, which is China, primarily China, and then the second factor is the dollar. Then we can talk a little bit about the Fed and the dollar, but we expect the dollar to weaken. So that's the second pillar, to be positive on commodities, and then the third pillar would be the supply side.
Okay.
So the supply side, the differs. The supply side factors differ, across different commodities. So I think at this moment we are more positive on crude oil, on energy, because we think there's a more supply side constraint on oil than let's say base metals. So if we think about like the three pillars, Chinese growth is rebounding, which is driving the demand side. The dollar likely is peaking. Probably from a long-term point of view, the dollar has become so expensive, so stretched. So it's in the bull market is in the final inning. Then the third factor is the supply side. We really we need to look specific factors on the supply side.
Now, one of the things that worked in the North American context is, some of the winners during COVID, where there was a structural change before pandemic, so they were already, let's say, gaining market share, continued to do so even after the burst of post-COVID came about, whereas some other things that they were really just beneficiaries during pandemic completely fell back to earth afterwards. One example of structural change is long before pandemic, people were already moving to small cities just outside of big cities, and that massively accelerated during pandemic and hasn't stopped since. Are there any of those trends in China where you have a structural change that now that we've moved post-COVID, is just going to keep accelerating?
Yeah, well, that's a great question. It's difficult to say. I think the only thing that I can think of at this moment, I think first of all, obviously, we're talking about a cyclical story.
Yeah.
Right. So the Chinese economy is rebounding from let's say a man-made disaster. So last year was completely, the recession was pretty much man-made recession. So we are coming out of that. So typically, this kind of recovery is, we can say, in two phases. Right. The first phase would be a policy-driven phase.
Right.
Where basically you remove all the restrictions, then demand just automatically bounce back, and then on top of that, the government kickstart the recovery by policy easing, by public spending on infrastructure. So then on the second phase of the recovery will be driven by let's say more market-driven forces, market
Mm.
forces. So the economy recovers, then household confidence improves, household income improves. The private sector capital spending intention also improves. So that would allow the economy to shift from the first phase of the recovery, which is driven by
Mm.
policy, to the second phase, which is driven by, let's say, market forces. So we are still expecting this to happen.
Okay.
So structural changes. On top of that, we know the Chinese economy has been really undergoing a very dramatic change. I think
Yeah.
to on a positive side, obviously the China in this kind of geopolitical environment has become a lot less friendly towards China,
Hmm.
right? So now many companies are most companies are thinking of rearranging supply chain, at least to have a China plus one strategy.
Yeah.
So I think that will obviously have important impact on
Mm.
Chinese exporters. So I think we're at the start. So personally, I'm not really very concerned at this moment because
Okay.
if you think about most economies that are kind of getting this kind of supply, China plus one, like
Mm.
Vietnam. Vietnam is smaller than the size of Vietnam GDP is smaller than Shenzhen city, right?
Okay.
So it's just the size is just China GDP is 6 times bigger than India. So these economies are not at that kind of scale to really challenge the dominance
Right.
of Chinese manufacturing capacity. So I think but the starting point now this is a kind of a trend that is already developing and will likely
Mm.
accelerate. So I think this is on the negative side. On the
Right.
positive side, you have Chinese companies are also very rapidly climbing up the value chain.
Mm.
We saw that his previous years. We saw that in let's say in electronics,
Right.
in white goods, but now more recently, probably that last year China became the second largest car exporter in the world, only after Japan. So the EVs, the Chinese auto industry has been just explosive. Chinese EV technology, battery technology, like solar panel, wind turbine, all these kind of new energy technology just dominating. So you see, there's also kind of some sectors that are kind of benefiting from this kind of very powerful tailwind.
It's funny because I didn't want to lead the expert in terms of EV, but it seems to me like that's one of the things where there's this structural change, because if you remember the view during the last China boom, it was just that if China's going to industrialize the way America did, then the whole world is just going to be full of pollution. And so now it seems like if we look at EV as a percentage of total car sales and just all of these things, it seems like China's the leader. Um, and in terms of production and so on and so forth. And then there's a few other things where, again, if we looked at the early part of the last China EM boom, it was just building out infrastructure with stuff. Now China is a leader in many things that require intellectual capital. It's kind of neck and neck in various areas. It's a strong number two in terms of genomics. In terms of patents, it's way above Europe. So beyond EV, is there anything that, it is still a somewhat command driven economy. Government has been very keen on EV for a while. Are there any other areas that the government really wants to see China taking a leadership role? So if we look, we just had a big important meeting, and we had some very major Congress last fall. What are these kind of structural themes where China could take a leadership role, like these new forms of growth?
Mm. Yeah. So I think the clear theme from last year's Congress, one of the themes, is self-sufficiency in key technologies, right? So this is also a way for Beijing to deal with this kind of geopolitical headwind. Obviously, the U.S. is weaponizing IP, is weaponizing key technology. So I think from Beijing's point of view, right? So they can't. This is a kind of choking point for them. So they want to be self-sufficient in, let's say, semiconductor. Semiconductor is a huge deal for Beijing. China actually net trade deficit in semiconductor is bigger than Chinese deficit in crude oil, in energy. So just if we think semiconductor is the new energy for the current industry, for the current wave of industrialization, then you can understand why Beijing has been so nervous about it. So yeah, so I think all key tech, semiconductor, biotech, space technology, new material, all these kind of things, China has been trying to, AI exactly, yeah. So and they have really been trying to support domestic players in these fields. So I think this is a very actually important point. If we can just spend a few more minutes on this, because if you think about, like, obviously what happened in China in the tech sector in last year, many people were very concerned, right? So because they were thinking of, when they think about Chinese tech sector, they were mainly talking about the Chinese crackdown on, let's say, Alibaba, on Tencent, on gaming, on tutorial, on tutoring business. But if you look at other sectors of the tech space, right? So semiconductor, EV, solar panel, new energy, all these kind of new material, all these kind of things, growth has been explosive. So that's why it's a very interesting. Like when we talk about China, we really need to have a kind of more nuanced view of this country. Is China is never black and white. So if we talk about Alibaba, we talk about the crackdown on Alibaba and on Didi, then you hear Chinese crackdown on tech. But you look at BYD, you look at KITL, you look at other sectors, it's just booming. So yeah, so I think there's a lot of this kind of contradiction here.
Mm. Yeah, well, I think one thing underlying all of that is a tremendous number of really cheap engineers. So cheap engineers will always find something very interesting to do. I mean, if we look at the U.S. when they were reducing their military in the late 80s and 90s, all of a sudden these engineers, got fired from the military and basically started the internet, and Cisco and Microsoft and so on really grew tremendously after that. So maybe we see something similar in China. I was just wondering, like, very related to that, and policymakers and regulation and so on and so forth. Would you say that policymakers blinked and basically they'll do whatever it takes to reaccelerate growth? So we saw that the removal of COVID restrictions, we saw that a lot less regulation coming down the pipes, kind of a staving off in terms of worrying about the excesses in the property sector and really kind of supporting the property sector. And then up until a few weeks ago, trying to kind of warm up in terms of international relations. Once growth goes from, again, when we last talked, close to zero, to what the government would view as decent growth, let's say 5 to 6% and more than a couple months, are they just going to relapse back into, not completely relapse into massive regulation again, but are they going to relapse and then start re-regulating, start kind of redistributing wealth, having the economy become less free market oriented and more kind of top down from the government, or do you think that just growth got way too weak? They're going to put the policy gas pedal to the metal and do whatever it takes, and we're really, at least not for a couple years, going to see much of a relapse in terms of re-regulation and redistribution of wealth? What are your thoughts there?
Yeah, that's a great question. So I think in the next, let's say in the next 2-3 quarters, the policy outlook should be quite straightforward. Should be as you mentioned, the economy has been so weak, the labor market is so challenging, deflationary pressure is so strong, housing market is in a deep slump. So obviously they would want the economy to grow, right? So this year they want to create 12 million jobs, and this is, if you look at the Chinese historically, 1 percentage point of GDP growth creates about 2 million jobs. So then if they want to create 12 million jobs, they need the economy to grow 6%. They say they want the economy to grow 5%. That's their kind of target or estimate. I think they have to grow faster than 5%. And even like if they create 12 million jobs, this year they estimate about almost 16 new young people will join the labor force this year. So basically, even if they create 12 million jobs, then they still have a lot of young people will be really looking for jobs, and also the young people unemployment rate at this moment, I think it's like 16-17%. So that's near record high. So this is still a very kind of a serious concern for Beijing, and this can be a kind of potential source of social instability, right? So from this point of view, I do think Beijing will do whatever it takes to revive the economy, at least in the next couple of quarters. But beyond that, you mentioned it's a very interesting question, and obviously nobody has the crystal ball at this moment. But we can think about how the way that I visualize. I try to get a sense of how the situation will evolve going forward. So the way that I see it, China has in the past, let's say 30-40 years, growth has been phenomenal, right? So the whatever measures that we look at, the economy has been extremely successful. So that's that kind of success, that kind of massive prosperity. Obviously, one reason. So to me, one of the reasons of that kind of prosperity was due to what I call kind of the Wild West policy. Basically whatever they could achieve the economy, achieve growth. They did whatever it took to grow the economy. So then you had a Wild West era in Chinese growth. So that was okay when the economy was, people were very poor. So people didn't really care much. They were just looking to make more money. But then you reached a level where China was no longer a third poor country, right? So the per capita GDP has reached a middle income country level, high middle income country level. So then people's desire, people's needs began to change. So that's why in the past couple of years, if we think back, environmental campaign by Xi Jinping was a top concern by Chinese people too. Like you mentioned earlier, if China continued to industrialize with all these kind of polluting industries, then all the Chinese people would be dead, right? So in a few years. So obviously that needed to change. So that's why they began to do this environmental campaign to clean up the air, the water. They began to plant more trees. I think it's the same thing. Like we know Chinese Gini coefficient was very, very high, right? So basically the income disparity was very high. So that was also a source of social discontent. So that's why Xi Jinping is trying to change that. So I don't really think the policies that he's thinking completely, do not make sense. I think actually the starting point was correct, but it's just whether they are able to manage a proper kind of balancing act between doing the right thing to make. We know that, right? Economics is all about a trade-off between efficiency and equality. So we can just be hopeful that they will try to promote equality without sacrificing too much in the way of efficiency.
No, definitely, very, very thought provoking. And you're right. There's no easy answer. Let's kind of switch gears a little into financial markets. So China's economy has been accelerating and growing above expectations, and liquidity has started to improve on many different measures. Normally, this is very bullish for financial markets. In fact, that is the most bullish combination that you have in financial markets. And the rest of the world is the opposite: decelerating growth and decelerating liquidity and stimulus. So growth is going to keep decelerating. Yet Chinese financial assets have not outperformed. Why?
Well, it outperformed, let's say, since November, right? So, if you look at Chinese assets, Chinese MSCI China rebounded from the bottom in November to probably middle of last month, rebounded by like 50%. So it's a massive rebound. So obviously, I think the time horizon matters here. So I think we had a massive rebound, and so then now there may be some profit taking. So I think that's probably what's happening. So I see the problem as technical instead of cyclical. So I think you mentioned this is the most bullish phase of the equity market. I think that's makes perfect sense. This is in at Alpine, this is what we call the sweet spot, where the multiples are still quite low. Exactly, yeah. The multiples are still quite low. Earnings are beginning to improve, and the policy is still very accommodative. So that's the sweet spot. Um, so I don't really see reasons to be negative at this moment, unless the sweet spot, let's say, turns sour. If the economy is already boomed, then we are at policymakers are about to tighten. Then the equity multiples are elevated. So we are not there yet. So that's why I think cyclically, I think it still makes sense to be more positive on China versus the rest of the world.
Okay. So I guess one risk to the bullish view, right? Because if we look at China or EM overall, they're very correlated. The last 10 years has been a disaster. It's like massive underperformance, leading these markets to be extremely cheap and extremely hated. And that usually is a setup for a structural change, with your catalyst being China blinking and accelerating liquidity, which will accelerate growth. I guess one risk to this view is geopolitical risk. Relations with the U.S. are getting pretty ugly post the balloon incident, and maybe there's a few other things behind the doors. If we look at, fairly recently, the foreign minister gave the warning that unless the U.S. changes course, there will surely be conflict and confrontation. So Chinese leader Xi reflected these similar views. He recently chose that minister, and so he must have been on board with that kind of very strong statement that, I don't know, when's the last time that relations between the U.S. and China have been that bad publicly? When's the last time we heard a statement like that out of China?
Yeah, so that would be the Alaska meeting, right? So maybe 2 3 years ago. Yeah. So I think that's a very real concern for sure. That's something that we have to be mindful. So we're talking about new world. It's a new world order. Uh, at this moment, I'm not really overly concerned. Or I think fundamentally, I believe both the U.S. and China, ultimately, they are rational players. They would, if you think about Biden administration, he has been trying to reach out to Beijing to talk about installing guardrails to make sure the rivalry does not, let's say, completely degenerate into some kind of downward spiral.
But as part of that same speech, it was said, no level of guardrails could protect against the path the U.S. is on. Right? So it's a kind of a very different view, and it's a scary one.
Well, yeah. Well, no, I think like Washington's view is that has been they want so this is what Washington wants Beijing to be cooperative whenever Washington wants Beijing to cooperate, and Washington can just do whatever to crack down on Chinese tax actors without Beijing retaliating. So I think this is what this Chinese new foreign minister is hitting back, right? So basically, you can't do whatever you want to do without me saying anything, right? So I think this is still it's not completely surprising to hear Beijing is saying this. But realistically, the geopolitical tension between these two countries has been rising since Trump, right? So, if you look at in the past couple of years, the tariff war, all these kind of embargoes, all these kind of American putting Chinese companies on this entity list. Chinese trade with the U.S. last year reached a new record high, despite all this. So you still have this is a still very, very globalized system. So I doubt. So basically, putting Chinese companies on the entity list would be, let's say, a risk for specific companies. But so far, the macro impact has been fairly limited.
I mean, you kind of raise an interesting point. Most of our viewers really only get Western media, and some are more left, some are more right, but it still has that bent. And certainly the media and the US populace has become objectively much more negative towards China for some time. If you look at the percentage of actually both Democrats and Republicans, citizens that have a positive view of China, it's declined massively the last 2 or 3 years. So if we look at this, geopolitical conflict with the U.S., whether it's over Taiwan or helping Russia or anything else, what's the Chinese perspective? Like, how are they viewing this? I'm not asking right or wrong. It's not normative, but can you give our viewers some sense as to the view from the other side?
Yeah. So I think from Beijing's point of view, they are very concerned this is happening. They don't want to let's say sabotage the relationship with Washington, because obviously this is the dominant superpower in the world, and this is so critical for China's national interest. When maintaining normal trade, and normal financial flows. I think that's so. I don't think deep down Beijing wants to really upset Washington. But I think now Beijing realizes, rightly or wrongly, U.S. is just have this kind of containment strategy, and you mentioned this kind of bipartisan support on getting tough on China. I think, and also I think this is from Beijing's point of view, they are concerned this is kind of creating a downward spiral, right? So the why politicians are so anti-China is because the public opinion in the U.S. Has turned against China. So like favorite opinion on China has dropped to all-time low. So then you can say the public was led by the public by politicians, by their opinions, by the media. But then because of this, you almost see a kind of vicious cycle where the public opinion is getting worse on China, and then the politicians are capitalizing on that kind of sentiment. So you have this kind of feedback loop. So I think that's something Beijing is concerned about. So that's why I don't think Beijing wants to challenge Washington, but the fact is, China is itself. This is a massive economy, massive country. So the rise of China itself is disruptive. So I think this is just it's just inevitable. I think this kind of conflict.
Yeah. Well, that's Paul Kennedy's seminal book from the 1980s that we've discussed so many times, The Rise and Fall of Great Powers, that first it's economic power and switching from a current account deficit to surplus, which the opposite happens for the leader. Eventually, the economic power leads to political power, and way after the fact is the military power. And the tough part is when you get the switch, because the person who had the power still views themselves as powerful, and the person coming up says, I deserve more. And there was a very long period of time when, at least to a non-expert outsider like me, China was quiet. Like during that last China boom, yeah, the US did lots of stuff pre-Trump that pissed off China, but they didn't do that much. They were kind of quiet, and now they're becoming a little bit louder. I know it's really tough, but let's try and keep this answer to 2 minutes. The two views on Taiwan are they basically can't go together. And that was quiet for a long time, but it doesn't seem so quiet right now. Is it inevitable, maybe not in your 2 or 3 years, but is it inevitable that we'll have a military conflict over Taiwan?
I think it's very, very unlikely, unless Beijing says certain things that you cannot do. You cannot declare, let's say, formally declare independence. You can let's say, allow U.S. to send troops, to station troops in Taiwan. So things like that. Unless that happens, then I doubt there will be a war over Taiwan. I think simply think about it. Taiwan is hundreds miles away from China's coast, and China's coast is the most vital part of the Chinese economy. 90% of Chinese people live on the east side of on the east part of China. So it's hugely population density is very high. The coastal provinces, they are the most important economic powerhouses for China. So a war in Taiwan will not only hurt Taiwan, but also will damage some of the most vital provinces in China. So I think the economic cost would be a lot bigger than the Beijing is able to stomach. And another reason is on the Taiwan side. I don't think we can compare Russia, Ukraine with China, Taiwan, because think about it. Whatever Russia does to Ukraine, their purpose is to make sure Ukraine will not be part of, let's say, the NATO to pose a military threat or national security threat to Russia. So basically, what they want to do, what the Russians want to do in Ukraine, is to destroy the capacities in Ukraine to fight back. But for China, it's a different story, right? So China views Taiwan is part of this kind of great nation a renaissance. So Beijing wants to maintain prosperity in Taiwan. So they cannot really just destroy and conquer. They have to make sure Taiwan is a stable and prosperous part of the greater China. So that's why I think the strategic purpose is different from Russia's purpose over Ukraine. So yeah, so I think just from that I can hardly see a real conflict between the two sides of the Taiwan Strait anytime soon.
Very comforting. So if we look overall, there is both this internal and external political risk in China, but you make a very strong case for EM, which we agree with at Northland. Is there any reason why you need to buy EM stocks overall? Why you can't just buy EM ex China? It's historically highly correlated. The turning points are the same, including most recently. What are your thoughts there? Do we need to take the political risk of actually being invested in China, or can we just buy EM ex China?
Yeah, that's a good point. I think EM overall correlates with China a lot, right? So the broader trends are similar. So there is a case that you can buy EM without China. I think you can see a case of that. But also we talked about, first of all, historically China has been outperforming EM benchmark massively in the past, let's say 20 years. Obviously we had a almost like black swan event last year, so China underperformed, but that's not norm, right? So if you look at the historical trend, China has been outperforming within the upper trend, but then last year was really a two sigma event. So you actually can see a case where you want to be more positive on China at this moment, simply because it's such an extreme event. But also on the other hand, we talked about Chinese rising power in Chinese tech earlier, right? So it's not just about Alibaba. It's also some semiconductors, EVs, solar panel producers, new materials, all these kind of things, battery technologies. They are very, very competitive, and they are very, very. They almost all of them are private owned. So you don't really see these kind of potential in any other EM countries. Like globally, you have US and China. That's all. You don't really have the similar players in other EM countries. So if you want to gain exposure to these kind of technologies, actually China and the US is probably the only place that you want to go. And you don't want to put all your eggs in one basket, which is the US. So maybe China is actually is interesting place to invest.
Okay, and just a word. Our clients will always be in balanced portfolios. Bonds are a lot easier to buy now than they were in the past. What are your thoughts on specifically emerging market bonds? Do you like them in absolute terms? Do you like them relative to bonds elsewhere? Do you like them relative to EM equities? And then within that, do you favor the US dollar EM bonds or the local currency?
Yeah, so the simple answer is we like EM local currency bonds more than their dollar bonds. Because basically we have like these two themes for our EM bonds view. The first theme is EM disinflation. So like in the US, EM countries had inflation problem, and then they tightened very, very aggressively. So we see signs that inflation is peaking out. So what's different between the US and emerging countries is most EM countries, they tightened a lot more aggressively than the Fed. So their let's say real policy rates are positive, but the Fed policy rate is still kind of lower than inflation, so they may have a case to stay higher for longer. But in EM countries, inflation is already rolling over. Many countries like Brazil, Mexico, South Africa, their inflation has already fallen below their policy rate. So they have a stronger case to pause or even to ease as soon as inflation drops, let's say, to a more kind of comforting level from policymakers' point of view. So I think, so if that's the case, then we can see a case where EM local interest rates will begin to fall. So that's the first theme. The second theme is the dollar. We believe the dollar has made a long-term peak, will begin to moderate. So if that's the case, we would like EM local currency bonds because you have the currency side as well. So EM local currency bonds have higher yields, potentially with appreciating exchange rate. So that's why we like EM local currency bonds at this moment.
Okay, that's fantastic, Yan. Thank you so much for your time. Just to kind of reiterate some of the major views, Yan likes EM local currency bonds because he thinks that the central banks are more ahead of the curve than the developed markets, and the currencies should go up. He likes EM stocks overall. They're still very underowned. They've underperformed a long time up until about 6 months ago, and they should benefit from this accelerating Chinese liquidity and growth. For those that, for political reasons, don't want to be involved in China, you should be okay in EM ex China. You'll give up a little bit of the upside, but if there's constraints on your preferences, then you'll be able to capture most of the upside. And then if we look at the Chinese economy overall, it should remain strong. If we use that 5% target, we should go beyond that because that's what's needed for the necessary employment growth. Within China, there's some new sectors specifically related to technology that are needed for self-sufficiency. So that would be things like semiconductors, AI, genomics, EV, etc. So maybe we look for some new winners in those areas. And for the next couple quarters till the Chinese economy is kind of at sustainable cruising speed, Yan really doesn't see policymakers backing off. And intermediate term, maybe they won't be full-fledged towards deregulation and opening of the economy, but it'll be more of a balancing act. And the geopolitical risk is real, but doesn't see a hot war as likely in the next few quarters or the next few years. Did I miss anything, Yan?
I think you did a really good job summarizing our conversation.
Okay.
Great.
So if anyone has any follow-up questions, please feel free to reach out to myself or Arthur, and we can contact Yan. Beyond that, have a wonderful day. Thank you, and have a good one. Cheers.
Thank you.